Hey everyone, and welcome to another edition of the Buddy Study Group for Worksite Solutions and help. They said yes. What do we do? Right? That's going to be our big topic for the day. We talked about going through the sales process in depth on the first call, but we had a lot of really good questions around kind of the pre-sale side and how to get yourself ready and equipped with the resources and how do I say the right things and ask the right questions? Well, you've done all that. You're awesome. They love you and they said yes. And now we got to figure out a whole brand new set of things that need to happen. So we're going to talk about the sold group process and maybe we'll flip this to another session on the full implementation, but let's start with how we start when a group says, this sounds good, what's next? Because this is the last place we want to stumble. We want to have really good answers here, just like we did on the pre-sale side. Um, so there are a ton of people who get involved once this yes answer kind of comes down. There are people that you will not have even met yet who will all of a sudden become very, very important to what you're doing with this group and will be vital in the success of the enrollment because you can do, again, all the right things on the pre-sale side, but where you're really going to be judged at the end of the day is the success of kicking off and implementing the enrollment, right? So there's a lot of different boxes to check there. So Mark, they've said yes, and I
Mhm.
think, the first element I would say is a kickoff call to get all these new people involved in the process. But just because they said yes doesn't mean the group is formally sold, so to speak,
Mhm.
right? There's still some paperwork, obviously. Just like on the individual side, a client says, yes, this looks good to me. I want that benefit level. Let's go for it. There's still some paperwork that needs to be signed, right? There is a
Yep.
group application that actually needs to be done, just like an individual needs to complete their own application as part of the enrollment, right? So can you give us a
Yep.
little idea on how that works?
Sure. And I'm a big picture guy, so I want to set the stage a little bit broader, and then I'll kind of rein it in a little bit back to where your
Sure.
question is. But you have a sales team from the carrier that's going to help you, and you probably met them. They're the ones helping you with proposals. Implementation, which Jason's referring to, is the next step here. There's a billing team, and then there's servicing. Okay, so each of those has kind of the carrier counterpart, and you on your team will want to have kind of your, understanding of how that's going to look for the client, and you want to be involved in each of those steps. So once you're kind of got your help from the sales team, the group says yes, like Jason said. What you want to do is have that group application signed, ideally. Some carriers require it before you start implementation. And what happens is you fill out sometimes the one-page form. It's super simple. It just says, here's the plan design that we've chosen based on the proposal. Here's the effective date. So you're going to want to make sure you agree to what your enrollment dates are, which will determine your effective date, which is when that first premium is deducted and when the policy becomes effective for the client. And then that unlocks the implementation resources from the carrier to help you. So you'll usually be assigned someone called the implementation manager, and they're going to walk you through the carrier's process and their checklist. And you're going to have an implementation call, ideally, like Jason was pointing out, maybe even on a weekly basis, where you're going to have yourself as the broker. Maybe if you're working with another broker, you're going to have your benefit broker partner there. You're going to have HR. You're going to invite the client's key advocate, your stakeholder there from HR, and you're going to have the carrier implementation person. And sometimes your salesperson will also be involved in helping you at that stage as well. But you're going to have a pretty sizable team on a call to make sure that everything's set up correctly the way the client wants it to be per their other benefits. So the way to think of this is another employee benefit. So the checklist is to determine, well, what do they want the terms to be in terms of the implementation dates, but also who's eligible. 20 hours a week, 30 hours a week? What's benefit eligibility criteria typically for that employer look like? Billing setup, enrollment platforms. So there's a whole host of different items involved there.
Yeah. And again, like I kind of alluded to, this is kind of success or failure, right? I mean, of the enroll like the judgment of how the enrollment goes starts here, right?
Mhm.
So I think it's really important that you gather all of the right people from the jump because like you said, once a week, once every 2 weeks at minimum, you're going to be getting together with these folks and you're going to be coming up with what needs to be put in place before we start the enrollment, who's responsible for that. Um, you know, there's just so many moving parts that you need to have the right people who are engaged and who are really on board with doing as good a job as possible. And your implementation manager, we try to have continuity there with every one of the carriers. We try to get the same implementation manager whenever possible because that continuity is helpful. They know how you work, you know how they work. The process just becomes infinitely more replicable, I guess is the way to say that.
Yeah, and it gets
Um,
easier as well in a lot of ways because you've been asked by the client during the pre-sale process, how are certain things going to work? Hopefully, you've pushed back and said these are the conditions we need, such as employer funding, like we've talked about a lot on these calls. And then by the time you get to implementation, pretty much everyone has a general idea of what this is going to look like. So you're really just trying to convey that and dot the I's, cross the T's on some of the details more than you're making major decisions at this time. Usually you have the team on the same page by this point.
yep. So there is a lot of like forward-looking items to talk about. And we won't do super deep dives on these, but billing, how are we going to handle the billing? Are we going to do payroll deduction? How are we going to handle employer funding, right? How are we going to handle the enrollment dates if there's funding involuntary? How will we handle new hires, right? One of the common questions that gets asked are we going to do a guaranteed issue window for new hires within 30 days of their hire date, or are we going to do it during the annual kind of open enrollment period? So there's all these logistical questions that you'll kind of be exposed to for the first time, but that's somebody's full-time job at the carrier to be able to ask about some of these things and aid you in dotting those I's and crossing those T's.
This is
Um,
also
so
where you'll start to see the process for the group carriers, the true group carriers, start to differ from those that are individual products that are designed for worksite. The true group carriers will tend to be as we've described here with having this infrastructure already in place. So just be aware of the difference there between true group and individual products.
yeah, I want to start with just kind of like or bring up like I guess a cardinal rule or word to the wise. You'll put dates in place of when things ideally should happen and that we want to start the enrollment 6/1. I would just prepare for that date to change once or twice. Inevitably, I would say 75% plus of the groups we deal with push back at least once. And at the end of the day, as long as you're communicating and everybody's pulling in the same direction, that's completely okay. The carrier understands this too. They will work with you on pushing that date back and extending the end date proportionally if possible. But I would just say there are so many things that need to be put together from so many different people that I would just obviously set a target date so you have something to work toward and you're not waiting till the last minute on things, but also, know that there will be some wiggle room to push the date back if, one or two things are going to take some time to get put up.
Yeah, 100% agree with that. But I will add one addendum to it, which is this is very often the case on the first enrollment that you do because there's a lot
Yes.
more first time learnings and setup, and maybe it's your first time working with a particular carrier even. Once you do re-enrollments, which you'll always want to offer to your groups if you can, then it becomes a lot easier and the dates are less likely to change because you already
Yep.
have, everything set up from the first time and everyone knows what they're supposed to do. That rarely, I would say, do those change unless there's something happening at the employer level. Most of the time, the changes for the first enrollment are because of the carrier and logistics around them setting it up and them just being busy in general and maybe not being as process oriented as we'd like them to be kind.
Yeah. Yeah. I would say, working with a good implementation manager makes all the difference because you see them as a consultant. They present themselves as a consultant. I'm here to make this work like all of your other benefits and make sure that, within the framework we have to work with, this functions very familiarly for you. It works just like anything else. And they're going to ask questions around that. And, you know, uh, I've seen very often that the client has very specific wants for how this is implemented and structured and eligibility rules and things like that, because everybody really wants a level of uniformity, right? If this benefit sticks out like a sore thumb, is a particularly difficult one to handle or one that's so different from every other benefit you put in place, not exactly a good look. So um, I think you'll find that the implementation manager is a consultant in that way, and just really helpful to the process. But beyond kind of all the carrier specific stuff, and just kind of the really mechanical stuff, I guess I'll call it. Was there anything else you wanted to mention on that piece, Mark, or do you think it's a good time to move to maybe a couple other items that are important to this piece?
Well, I'll reiterate something, which is it's really important for you to have these weekly calls, even if you have to suggest it to the carrier. Sometimes there's this little dance as to who's going to be the leader of this project. But I would encourage you make sure that call happens because that will also set weekly milestones for you that the carrier can deliver to as well. And that's less likely that you're going to have this last minute panic. We forgot to do X, Y, and Z and have to move the dates. So that highly recommended, even though I know it's, we don't love to have extra meetings when we don't need to. Even if you have a 15-minute check-in, that's a great thing to make sure you do for every enrollment you do.
It's funny, we're on a lot of these now because we're in the middle of implementation for a number of enrollments, and these meetings are always kept, number one. Uh, Number two, even if it's just, hey, how's everybody doing? Do we have any items we need to discuss that are still outstanding? And the answer is no. It is still very, very good for the relationship that meeting takes place. There's no updates. Everybody feels heard, and you go your separate ways. Now, I will say we try to, hang up the call like five, six, seven times, and somebody brings up something that they forgot about and they want to check on. And, these meetings inevitably almost never start with just, hey, how you doing? And then hang up. There's always two or three items to discuss. And before you hang up the phone, you think of about three things. And those three things end up being really important and bringing a lot of peace of mind to people as you address those. So yeah, those meetings are super, super important. So knowing what your role is on those meetings and what you're responsible for, what you're bringing to the table and by when, is just super important to having success. And if you're that account manager, knowing everybody's roles and what they're supposed to have and when is also a huge piece that, we also assist with.
And don't forget, your client is on this call with you every week, your key HR rep or reps. That's a great way to continue to build your relationship with them.
Yeah. And I think throughout this entire time, even though in our Buddy INS process, we establish specific meetings for training everyone on the product, the process, some of the resources we've put together. Throughout this entire time, you're training your client, and they're training you, right? At the end of the day. And I think that communication is super, super important. The more aware they can make, say, Mark and Wendy and I of their situation and how things work culturally within the employer, that makes us that much better at speaking to them specifically on webinars and making them feel heard and having the education hit just that much harder. But also, if we're able to train them on the resources that we have available for them and train them on the product and train them on the process, they're going to be able to handle a lot of employee questions for us, right? And they're going to be really educated when they're drafting communications, or maybe they're a person who wants to come on and tee you up for the first 5 minutes of the webinar. Just any little bit of training you can give each other goes a super long way. So we don't have Gretchen with us today, I don't believe. But one of the most important things you can discuss on kind of those first couple kickoff or implementation calls is really communications. And I know this is something that generally needs quite a bit of runway, right? Because it's not just the enrollment starts and you let people know the first day for the first time that the enrollment has started. That's not a very good recipe for success. So if you ask Gretchen, if I put my Gretchen hat on, she would say, at least 4 to 6 weeks, closer to 6 weeks of runway is really, really important for establishing the right communication cadence. And what channels are we going to hit for communication? Because a lot of the time it's email, but there are always some unique things like company intranet. Hey, I want to just put out a Slack message, little things like that. But also, how are we going to get folks from understanding that this enrollment is going to happen further into understanding the need for long-term care, further into understanding the actual product offering, into things like webinars during the enrollment window. All of that needs to be decided ahead of time, and there's got to be a good plan. And HR and your key advocates kind of need to be on base with that because they know the audience way better than you, and they can help you communicate what messages and what messages where are going to have the biggest effect. So, any thoughts on kind of the comms side of things, Mark?
Um, yeah, let me kind of like want to take one small step backwards, which is,
Sure.
and when we do employer funded and voluntary enrollments, typically you're going to want to break it into two separate enrollments,
Yep.
which your employer funded enrollment, which sometimes you can do through just a census file, which means that HR gives you all the data you need to enroll everybody, and nobody actually has to sign an application at all. The employer's paying for it, right? They're paying for it through a list bill for everybody usually. And then the voluntary might follow a month later. And your communication strategy kind of follows what type of enrollment you're doing. So your employer funded enrollment, you're communicating to them what a generous employer they are for paying for this benefit and what they're getting, so they place value on it. Whereas your voluntary enrollment, you're trying to help them understand why they should pay their hard-earned, paycheck dollars, to do this. So I think it's important to keep it simple by breaking them into separate enrollments. It's also smoother from an implementation perspective, but that's going to kind of set the scene on how much you have to do on the communication and marketing side. The employer funded ones don't have to have as much lead time. In fact, most of the time, we enroll everybody and then educate them on what they've already been enrolled in. We don't have to do it necessarily in advance of that. So that tends to be more operations focused first and then marketing communication second. Whereas in the voluntary, you don't have that luxury because you have to give people time to understand the offer, understand long-term care planning, decide what they want to do, talk to their spouse. That's why we want to have like a 6 week window ideally, because it's pre-education ahead of the enrollment period. So by the time the enrollment window opens up, people are ready to take action and you're not cutting them short. So
Yep.
the only thing I would add there is that detail. But on the voluntary side, for sure, everything Jason said, best practice. And then the reality of this is the client's going to tell you what their process is and what they have time to do. And they're going to push back and say, can we do this in 2 weeks instead of 6 weeks? Can we do, the enrollment period differently? And it's okay, to be very nimble to adjust your process, but have your best practice, let them know what works best, and then you let them, use that to guide their decision.
Yep. So I want to share something, and I'm not going to go too deep into it because I don't want to steal Gretchen's thunder, but I do want everybody to know that we have this playbook available. So if you go to the marketing section and you actually put in playbook, there's a couple here, but this group enrollment playbook here will give you a little bit of a snapshot of the marketing and communication strategy, right? So a fairly ironed out process here that you can get an idea of how we work on um, communications. I know we try to get away from the word marketing when it comes to enrollment. So communications, education, how we're actually doing this with a little bit of a timeline here, what happens week one, week two, week three, right? But to get an idea of what resources we put together, right? Landing pages with webinar replays, some of the main topics we cover on those landing pages, understanding how we can embed into an existing website, right, to communicate the product, webinars, walking through kind of our usual webinar setup. The calculators obviously are a huge piece to this. So there's a lot of tools that go into this, and then you can get a snapshot of some of the emails, right? So here's like the footer of the email that gives enrollment dates, but also just an idea of some of the education. It's very kind of long-term care 101. Will Medicare or private health insurance cover long-term care? And by the way, here's a reminder of when enrollment begins, right? We're peppering them with the little reminders of key dates they need to know and what to expect, right? And this first email is super important. Here's just a fun fact about long-term care, and then what are we going to teach you over the next few weeks about this benefit as we head into the enrollment? Cost of care, right? And then the big hitters, keep things high level and the most important pieces. Down here, these emails take place when the enrollment is actually started. So you're looking at pre-enrollment, and then you're looking at enrollments live. You can see a lot more calls to action, right, in these kind of live enrollment emails. We're teaching them how to enroll. Where do you actually go to enroll? Um, and then obviously when we use long-term care specialists, the opportunity to schedule with them, we try to embed those in the emails. But then depending on the audience, right? Other different, if we've got a lot of veterans, for example, VA benefits, why long-term care now? But then we also have little social media campaigns, and you're going to see a lot more here soon from the marketing team, just kind of showing some of our sample communications. But this playbook is super helpful if you want insight into that part of the process.
Um, Jason, Sharon had a question in the chat. She had asked, how does it work when the employer pays their part and the employee wants to pay to step up their benefits?
It's a good question.
Do you want me to take that one?
Yeah, you can start.
So I would say first thing to figure out is how you're going to enroll those plans. So from an operations perspective, and the enrollment platform you use is going to be really important in that. So the most seamless way to do that is to have the employer pay for it and do the census enrollment that we talked about, and then to have the voluntary plan get what they call it stacked on top of the employer plan. So let's say that during the sales process, the employer agrees to pay for a 25,000 face amount for every employee as a base plan, and the employees can buy up to 100,000 a face amount of guaranteed issue coverage. The 25,000 would be already paid for, and the employee could choose to buy an additional 75,000 guaranteed issue. If they choose to buy the full guaranteed issue amount, really they have one certificate from their perspective. Even if in the carrier size 25,000 and 75,000, those get stacked together to be a 100,000 policy. So that's kind of the function of, what the enrollment platform will determine, how you can do it, and obviously the billing as well. The employer has to pay for their share, the employee pays for their share, and there's a couple of different ways to do that. But we'd recommend, for the most part, the easiest is going to be a list bill for the employer and an ACH or direct bill to the employee, which most carriers support these days. Probably 24 months ago or so, it was almost all payroll deductions. It still is a lot of payroll deduction, but more and more employers are asking for ACH, and most of the main carriers support that. but there's a lot of different ways to do that type of billing. Now, once you have that operations process not, down, I would say that's the first thing to figure out. Then you kind of is a little bit more natural to say, how am I going to communicate this to everybody? Because you know what that looks like. Then you can work with the HR team, and usually you're doing, like we talked about, two sets of communications with two enrollments that are going on one after the other sequentially.
Yep. Um, so um, we had another question that came into me directly. I think we can address that one right after we finish up any other items. Let's see. If the employer asks the question, what happens if the carrier decides to cancel their policy? It's a good question. Um,
So I can take that one too. So remember, there's an employer level policy, a group policy, and an employee policy. So this is specifically the group policy. When they sign the application, usually that doesn't commit them too much besides giving access to the employees to do marketing communications that everyone's going to be proactively offered the policy. So that's really the main commitment. Again, the employer can cancel if they decide to change their mind before they start. It's rare that the carrier cancels on the client. I have never seen that before happen. We just got off call with one of our top carriers, and they reiterated that once we give you a proposal and we commit to this, it is going to be very, very unlikely that we're going to take this away from you. So unless the carrier is exiting the market, sold their business to somebody else, like those really macro level things are happening, it's not common to see carriers, at least from our experience, canceling the policy on the client. So I hope that helps. Now, the side effect of that, which is understandable, is they're going to be very careful about which groups they take, which is why it takes a longer time to get proposals. Once they commit to it, they follow through with it. So just understand that that's the dynamic going on when it takes you a couple of weeks to get a proposal, especially if it's not a standard case that they're trying to get approved with underwriting.
that being said,
Hope that helps.
there are minimums that, allow them to reserve the right to rescind, though it's highly
Oh, that's a good point.
unlikely.
Yeah, let me talk about minimum participation. I that's a great point, Jason. I wasn't thinking about is in your proposal, it will have a minimum participation requirement. Each product, each carrier is different on that. Some carriers say you need 5 applications. Some carriers might say 15%, which is a lot different. So make sure you understand what the minimum participation is. When you do employer funding, almost universally right now, at least with our top carriers, you don't have to worry about participation because the employer is paying for it and that helps you meet the minimum. And you can do the voluntary in addition to that without a minimum. But if you don't hit the minimum, I would say it's also very rare for the carrier to take the policy away from the client. Usually, what will happen is they'll say, well, if you didn't hit the minimum, then the people that applied do have to go through evidence of insurability, medical underwriting. So they can still apply, but we want to make sure that we get them to answer the medical questions because, as you can imagine, if too few people apply, they're really worried about the spread of risk on pre-existing health conditions. So that's not a terrible, I'll call it landing spot if that were to happen. Most carriers will even just waive that altogether and say we'll issue this anyway. There may be some regulatory or state minimums they have to think about, as well. But in general, that's not been a major issue, but it doesn't look good for you if you don't hit the minimum participation. And that's another reason why we push back a lot to make sure that we have the right conditions going into it. It's just going to be a lot of friction, and your HR person's going to be very uncomfortable. And if you can say once you fund this, the minimums are waived, their shoulders drop, and you can tell that that's a load off of their mind. So um,
Yeah, I
that's
had somebody message me directly to that point. I've got a smaller group, we're looking at maybe 6 employees, but likely to be employee funded. In that situation, I would actually push back and insist on employer funding, even at an incredibly small amount, even the smallest level base plan worth of funding. Um, something that may be trivial for them to fund next to other benefits is going to make sure that, for a group of six, there's going to be a 5 or 6 application minimum with both of the carriers that we work with. So at the end
Hmm.
of the day, you have to bank on everybody voluntarily purchasing to hit that minimum. So even, again, a rather trivial funded amount is going to help everybody, including you, including, anybody there who's working HR, the executive, like, for whatever reason they're looking at it for, they definitely don't want to see it like, taken away or just not performing at the end of the day. So with smaller groups, they may be a little bit more tight on things too, because it's a very small sample size, very small spread of risk from the carrier's end.
Yeah.
So blame the
Also,
carrier, but
mhm.
it helps everyone.
That's okay. Yeah, that they're very happy to be blamed for that piece of it, which
Yes.
is these are the requirements to make sure that you're successful. It's important that you understand that this is the positioning that HR is going to look good and be the hero. So you're trying to do what's in their best interest. Um, the other follow-up was what happens if the carrier exits was kind of his main concern here. So at the group level, they can stop taking new hires or new applications. At the individual level, this is fully portable coverage. So if the group certificate is terminated, there's a portability privilege that every employee gets to take it with them as the same contract as when the employer was on the group contract. So your employees are protected on the long-term care side. That might not be true of every voluntary benefit, but for these products, every carrier that we work with has this portability privilege that literally says if the group terminates, if they leave, if they retire, they're not attached to the group anymore for whatever reason, they're going to get an individual policy, their premiums aren't going to change, and it really runs the exact same way. And they built that because they understand that long-term care is a product you buy and keep for your lifetime. It's not like the other voluntary benefits where they expect people to buy it and decide year by year if they want to keep it if it still applies to them, right? It's designed differently and works with a lot of guarantees in it.
Hey, Mark,
Mhm.
speak to the point of if the employer doesn't no longer wants to pay. It's 2, 3 years in, he's got his
Mm,
12 employees. He said, this is a lot of money. I'm really out of crunch. Talk
sure.
about what happens to the
Yeah.
employees.
So the policy itself, in terms of who has coverage, is independent of the billing, who pays for it. So you're still going to have the same rights regardless of whether the employer is paying it or whether the employee is paying it. In practice, we don't see that happening yet with a lot of groups, although financially or otherwise it can happen. Because when you're marketing the value of this to your employees and you take it away, that's psychologically, not something employers want to do. They usually spend a lot of time deciding if they want to do it, and they usually commit to doing it, at least for a certain amount of time. But the implications of that happening are that the employee would just pay the premium. So you'd set it up as an ACH, just like if they left the company. Remember, if they leave the company, the employer is also very unlikely to continue to pay for people that are no longer with the company. And that's a very real concern that we do spend a lot of time thinking about and telling them about is make sure that the employees know that they should switch over the billing to keep the policy in force for themselves. A lot of the employer funded plans are going to have higher lapse than an all voluntary plan would have because when the employer pays for it, it's very likely that the employee might not keep it if they didn't pay for it in the first place, right? You can picture that scenario. So that's the main thing I would say, Wendy. If the employer stops paying for it, treat it like the employee left, and it's the same type of process there. Now,
But yeah,
that being
I think
said,
if you're getting that question, like, what if I don't want to pay this in 2 to 3 years? You know, do you have the right fit there is fair to evaluate
that's fair.
at the
Yeah,
end of the day. And when we're selling products on the individual or group side, we're trying to sell things at a level of affordability of something they plan to keep, right? They see the value and they can afford it to a level that they plan to keep it.
That's a great, that's a,
I do have a group though that recently said to me that, look, we're going to do this for a couple years at X amount of dollars. But I think in probably 3 to 5 years, I'm going to cut our dollars down. I'm still going to give them something,
Mhm.
but I'm going to have to cut it down.
Okay. I mean, at the end of the day, if that's where they're thinking up front, I agree with Jason. Just like an individual policy, if they sold you that, I would probably tell them to buy less coverage.
Yeah.
I mean, it really is as simple as buy what you can afford to keep, just because you don't want to have disruption. That being said, if they reduce their spend, if the employee pays the difference, the carrier is fine. They're not going to look at who's paying the bill, but you don't want it to lapse because the premium goes unpaid. I would say buy a lower level of coverage, most likely first. And then,
I,
you can decide if you want to increase the coverage for certain people as a carve out instead. And then you can selectively choose, how much you're paying for each.
yeah, and I can't speak for every employer, but it's kind of like to what Mark said, what sort of visage does that set for the employees? We're scaling back our compensation and benefits. Are things not going well? Like,
Times are
do I need
tough.
to?
Times are tough.
It could be. Yeah, and I can picture, that concern being there for sure. It's hard to make those types
Small,
of commitments.
small companies, small,
Well, think
small
about how
companies.
they handle other benefits. It's always a good thing. Long-term care is rarely the first benefit sometimes, but it's rare. Do they offer a 401k plan and a match? Do they offer major medical insurance subsidy or payment? What do they do in those situations when the health insurance company raises the rates? Again, in these products, they're designed to be level premiums. You're usually guaranteed not to have changes, which is great. But those are real scenarios that all of your benefit brokers deal with, especially in the last couple of years, is what happens when my health insurance rates go up 20% and as an employer, I can't afford that anymore. So I think you're going to make similar decisions in those situations on the long-term care, side, but you shouldn't go into it saying if these rates stay the same, I'm going to want to spend less. That
Yeah.
probably isn't a good positioning. I'm trying to think about a situation. The only one I remember having happen is the Washington payroll tax where the employer said, let me just pay for the first year for everybody so I can opt everyone
Mm,
out or something like that. But
special
that's not
case.
a
Yeah.
that's not a necessarily good strategy, nor is it a common situation to be in. So
I think if you're in yeah, I guess every situation is different, but if you find yourself in a situation where they are planning to scale back or completely remove their level of employer funding, maybe you're just not ready to do employer funded long-term care yet at the end of the day. And when you find yourself in a place where you feel like you're going to put this thing in place and keep it there,
mhm.
maybe that's when we revisit the conversation because as well as we do, Wendy, a bad enrollment, for lack of a better word, stinks to go through. So you have to really like kind of conduct things on the pre-sale to avoid what you could see as a bad enrollment, right?
Yeah,
Because all of a sudden, if you have like three or four stinkers, uh, it's really, really hard to navigate the day to day when you're working with people who are, on the same page as you, pulling in the same direction, putting something in place that's really meaningful to them and they plan to keep in place. And
yeah. Here,
um,
I have an alternative, Wendy, idea, and I'm not saying that I've tested this, so I just want everyone to take it with a grain of salt.
I don't know. It's untested. I don't know.
I don't
some of
know.
our greatest
Okay,
ideas have come
give it to
after
me,
that
Mark. Give it to
preface.
me.
What I'd probably do in that situation where they say I want to pay for the first year only, because that's essentially what they're saying, is I would say have it voluntarily participated in, an ACH billing, so everyone gets billed directly by the carrier, and then give them a bonus at the end of the year for what they paid to
Yeah,
reimburse them for that benefit, which they can deduct, as a tax deduction as compensation. And
yeah,
then decide each year, do you want to pay that bonus? And who do you want to pay it to?
yeah. That's good.
It's
That's the
somewhere in
simplest way
between
to do it.
the hard line and just kind of like letting them have their way.
No, I'd rather have that than have it all voluntary.
Yeah.
And as long as you're setting expectations, that's what this is about, right? Is you don't want to say, I'm going to pay for this for you and then take it away and people don't expect it. But if you're telling them, we're gonna do this as a bonus to encourage you to participate just for the first year, and you're under promising and over delivering. That sounds like a win.
You can still hero
I want
market to that.
you just don't want them to forget that it's for the first year. So you just have to communicate it. But yeah, aside from that, I think it's not a bad strategy. In fact,
There's
some
an off
carriers
the
do
books
that.
promise that needs to be kept there,
Yeah.
you
And then
know?
the reality of that is you're going to get a lot lower participation when people have to voluntarily purchase and get reimbursed. But the other side of that is the people that participate will really want it more and will likely keep it more. So, again, trade-offs, there's a solution probably to every challenge, and the flexibility that you have in this market is one of the nice things about it, I think.
Well, I
Couple
gotta say,
uh,
it is a fun market. I mean,
yeah.
and having you and obviously Jason, and I'm in that group market with all of you, and it is really fun. It's exciting, it's really challenging. And it's a lot like the individual side, right? I mean, you have to get that sale or it means nothing. And you got to follow that sale all the way through because there are times, Jason, to your point, where those enrollments are a little shaky and you just got to reel them back in why they're doing what they're doing. So it's
Yeah.
been really exciting.
Yeah, and it's one of those things like don't judge a book by its cover either. We've had some enrollments where we're like, I wonder how this is gonna go, and they ended up being like some of our best. And really, there was one employer funded case in particular I can think about. Like when we first met the team, we were like, whew, this is going to be an interesting one, but it ended up being one of our best groups. You know, the employer funding made those executives really interested in the offer and learning everything they could about it, and the word of mouth spread, and they made webinars mandatory to attend, which is like, geez, that's the coolest thing I've ever heard as a person presenting on that webinar, right? But it really helped the participation. So, I think. Some cases could surprise you, but there were things kind of built in to give it that chance of being really successful.
Yeah. And the other thing I will mention is, have confidence that this is a great solution for them and really try to urge them to move forward. Don't be too pushy about it, but I think time is your enemy when it comes to long-term care sales, right? If they are committed to it, sell them the case, get that case done, follow up, be really on top of it. Because a lot of things can happen, especially when you're working with a lot of different people. They could leave the company. Your key advocate could leave the company. You could lose the person that was, making sure that it was moving forward internally. Or the carriers could change, what they're offering. Because before it's implemented, right, the carriers can decide what they want to do with new groups. So I would say like have that sense of urgency when you have the employer funding committed to, move forward, do the census enrollment. Try not to wait too much, right? Because it's people have second thoughts, right, about what they want to do. And again, you're not trying to be pushy, but you got to act when the interest is there. And the more hesitancy you have, the more they're going to have doubts. Like, is this really, what I should be doing? This person doesn't seem too confident in it. So you do have to have the confidence to move them forward. Even if you have to do the employer funding today and then do the voluntary 6 months from now, that's okay too. They say, oh, well, the voluntary, I gotta do the education. We're busy with major projects. We don't want to take people distracted from them. No problem. It's just the census enrollment. Keep it simple, keep it easy. It's just the time that they're worried about, not the money. Just help them move forward. And then we'll do the voluntary when you do your open enrollment. So even though we try to do off cycle to start with, if there's employer funding, right, it's really the key driver of most of this. And the voluntary can be done at a different time. So again, say yes, be responsive. I know it's sales 101 here, but really important not to lose sight of the big picture. Don't let other people or the carrier block you from success.
Yeah. So when we talk about implementation, it's hard to really impart the knowledge on you without like seeing it firsthand. But we hope this was a good look into it. But I think, regardless of all the um, complicated items, mechanical pieces to this, like all the people involved, like showing up is going to win you that battle. Like that's the most important thing to this whole process is just showing up. And you can show up by always keeping those meetings, but you can also show up by being there to help when anybody has a question immediately about one little tiny piece of the enrollment. That's part of showing up too. That's like the most important attribute to making these things successful, regardless of how you measure it. I think how that group feels about you when everything is said and done is one of the most important pieces you can be judged on, and showing up is like 95% of the contributing factor to a
Mhm.
success in that area.
Yeah, and even if you're not super detail oriented, try to at least take a look at everything that's going across your email, right? The enrollment platform is a part of this process as well. It goes a long way just going through the application one time yourself, which might only be 5 or 10 minutes. But a lot of us, might say, "Oh, I don't want to, I don't want to do a sample application. I'm going to ignore this." That's a mistake. You really need to go through the same experience that your clients are going through. Pay attention to those details. Ask, the detailed questions about why is this question worded this way or this type of thing. Just don't be shy about doing that or lazy about doing that, right? We all get busy and we get kind of like, oh, I don't have to do this, so I'm going to ignore this right now. But make sure to just at least put an eye on that one time. It doesn't
And
take
the
much
carrier
effort to do
administrator
it.
can walk you through that and literally, while you are on the call, give you the chance to give all of that feedback.
Mhm.
Because if you don't give that feedback, or even like in the enrollment, if you're not giving that feedback, you're just going to get, hey, 17 people have asked why I need to name a beneficiary at this part of the application. There shouldn't need to be a beneficiary name. You don't want those 17 people to just kind of complain and maybe get hung up on that screen and just stop and exit when they would have gone the rest of the way through and gotten something very meaningful to them, and meaningful to your enrollment metrics, right? At the end of the day. So I think like being able to give that feedback, hear what the word on the street is, and relay that to create a better experience in real time is super important.
Yeah. I'm gonna give a plug too, just our team and Buddy and what we're doing. And the reason I'm doing that is I don't want you to take it lightly, the implementation process here. Some of the people we've talked to say, "Oh, the carrier has an implementation team. I don't need support." But really, they're reactive. Most of the brokers they work with know how they want to run enrollments, what platforms they want to use, and they're used to saying, "Okay, given this is what the broker wants to do, here's how we implemented it." But if you're coming in and with no experience with the group side, it's really important at least you work with someone experienced, and that's why we have our enrollment process and services, because you at least need to go through it one time for every new carrier so you understand the process yourself before you kind of take charge of it. You won't really know what to do, and the carrier won't just give you a playbook. So just wanted to mention that really important. On the group side, I think there's this expectation someone else is going to do this for me, and then you'll be surprised that no, if you want to have success for your clients, you really got to be involved in the details of making it successful.
Agreed. In order to be interesting, you need to be interested. And I think that's like one of the big keys. You gotta like dig in and get your hands dirty, or have people by your side who are gonna get their hands dirty to figure out every little item. Even the smallest little piece of critique or feedback from an employee means so much. So being able to address that is huge. But that's it. I'm all out of items to discuss unless anybody has any questions on this part of the process. I know it's not likely you'll have many questions if you're not here with the group already or you have been in the past. But if anybody has any other questions, just to kind of pick our brains about what it's like, happy to answer.
A quick question, Jason and Mark. On the groups that we've had so far, I know our goal is always to offer this enrollment off cycle from their normal employee benefits packages. Do they ever come back a year, 2 years later and ask for them to align that with what their benefits are?
Yep. And that's something like in implementation, that's one of the questions your implementation manager will ask is, um, for like, how do we want to handle annual open enrollment? Or like every year we have new hires that are coming into the company. So do we want to have that person within 30 days of their hire date see that? Or are they competing with too many other things they have to do at that time?
Right.
We'll do it at kind of like the annual OEP. Um,
So
if that's
best practice, Dale, is what you said exactly. It's do the first one off cycle. and then do any subsequent ones during their annual benefit enrollment.
Yep.
And you can do it differently, but I think that works very well. So there's no reason to necessarily reinvent the wheel there.
Yeah, as long as you're able to kind of have faith in the fact that you've had enough runway and no other kind of competing, opportunities or things to look at the first time, you can feel a little bit more comfortable sliding it in with everything else because it's, oh, I remember all the education and webinars and things we had on long-term care the first time. Maybe I should take a look at this the
Well, and
second go
many
around.
times this is going to be a new employee,
Yeah.
somebody that joined the last year.
Or
And they
even
weren't
people who
maybe,
have seen the offer and
yeah,
purchased a small level of GI and can
yeah,
now purchase up incrementally due to the offer their group has. Those are opportunities for you that are there
right,
too.
right.
Yeah, the carriers are pretty flexible in their proposal language. And even if it's not in the proposal language, you can go back to them and ask for it the way you want it to be successful. So you're not locked in. If you made the wrong decision the first time and they want to change it, very often, that's easy for underwriting to approve.
Yep.
One more question I got was, can an employee increase coverage in the future? Which
Yes. It's
is
going to
very
depend carrier to carrier, group to group.
Yeah, but usually what we're seeing is that employees might buy the minimum or the employer might fund the minimum, and then they're adding more coverage beyond that later. And that's usually acceptable. To Jason's point, the question is it guaranteed issue or does it have medical questions, EOI? Almost every carrier treats what they call late entrant with some medical questions on it, but it doesn't mean they can't add coverage in the future. Some carriers will give you incentives, like if they participate the first time voluntary, will give you almost like a guaranteed insurability option the next year to add more coverage with guaranteed issue again. Some carriers will offer you for the first 2 or 3 years guaranteed issue. So they, like Jason was saying, they vary a lot, but we always try to position it where we have a starter policy available and we can add more coverage over time because what we hear back a lot is that people think long-term care is too expensive, and we want them to know that there's almost any price point available to them that they can choose if they want to participate. Even if it's the smallest amount of coverage. I think that messaging is really important. We do it all the time, is say, if you're not comfortable with the price point here, just buy less coverage, so that you can make almost a no-brainer decision, and that will encourage them to buy more coverage in the future. And they can also shop the individual market with you and buy another policy because they don't coordinate benefits, right? So you can claim on multiple long-term care policies. And that's another strategy you can use, which is similar to what you described of increasing coverage in the future.
Yeah, in most cases, the employee or member, whoever it is going to be best served by purchasing something that is easy for them to purchase and afford right now. And generally, each carrier, though different, has benefits for the next year or subsequent years. You never know if you're going to get another just straight up guaranteed issue enrollment window for any group that you have. That's always kind of decided well after the fact. Generally, when the carriers had some chance to do some homework on how the first enrollment went, but even for those, being offered this plan, generally they're going to be best served by purchasing something even small that first time around, and
Mhm.
generally there will be some benefits that follow from participating the first time.
Spouses are a little bit more, I'll call it technical as well, just because some enrollments require the employee to purchase it for the spouse to purchase it. So if the spouse wants to increase coverage, there may be some limitations or even apply. But they'll usually include not only new hires, but life change events. You get married, we can include your spouse, right? Because it's the first time your spouse is seeing it, up to whatever the spousal limits are.
Yep. Anything else come in?
That's all I got direct.
Okay. So I think long story short, show up, understand what your client wants, lean on your people who are specialized to do specialized jobs. And that is a huge amount of the recipe towards success after a group says yes. But it is all about kind of assembling those correct people and at the end of the day, just being super consultative and attentive. The rest you will learn as you go, and potentially with us by your side, you'll learn a lot very quickly, and there's a lot that you won't have to worry about. So, thanks for being here and learning a little bit about implementation. We'll talk through some other branches as we go. We'll have Gretchen and Joe on again to kind of talk marketing and comms and resources specifically. And we may even talk about re-enrollment. We may talk about during an enrollment window. How do you actually act? Whether you're a consultant or account manager, how do you act in that maybe 4 week window? What do you do there? Who's involved there? So stay tuned. Thanks for being with us. Be well and talk to you next week. Have a good one.
Bye.